BlackRock isn't just investing in Bitcoin, it's rewriting the rules. Their strategy, precise and powerful. Here's exactly what BlackRock's Bitcoin strategy means for you and your financial future. They manage more money than most countries' GDPs. We're talking nearly $10 trillion in assets, meaning BlackRock isn't just an asset manager, it's the asset manager. Governments turn to them in crises, and Wall Street follows their models. Corporations shape their strategies around BlackRock's preferences, from ESG scores to capital allocation. Their influence stretches far beyond stocks and bonds to the point that they shape policy, regulation, and even the direction of entire markets. So when it came to crypto, their absence was noticeable. For years, BlackRock stayed on the sidelines. Larry Fink, their CEO, once dismissed Bitcoin as an index of money laundering. While retail investors piled into crypto booms and busts, BlackRock remained skeptical, calling it speculative, unregulated, and risky. But then, quietly, things began to shift. In mid-2023, BlackRock filed for a Bitcoin spot ETF, a move that caught the financial world off guard. Not only was this the most powerful financial institution entering crypto, they were doing it in the most strategic way possible. Behind the scenes, they began building partnerships working with Coinbase, collaborating on custody solutions, and aligning themselves with the SEC's regulatory expectations. By early 2024, their Bitcoin ETF was approved, a watershed moment. BlackRock was no longer watching from the sidelines. It had stepped onto the field with billions of institutional dollars behind it. And for the first time, Bitcoin wasn't just part of the financial conversation, it had become part of BlackRock's strategy. But beneath their polished image, BlackRock was already executing a deeper plan. In June 2023, BlackRock made its move. They filed for a spot Bitcoin ETF, the iShares Bitcoin Trust. At first, the crypto world was stunned. BlackRock, the same institution whose CEO had once dismissed Bitcoin as a money laundering tool, was now spearheading a push for mainstream adoption. But this wasn't a sudden change of heart, it was calculated. Unlike previous ETF attempts, BlackRock's application came with a strategic twist, a surveillance sharing agreement with Coinbase. This gave regulators visibility into trading activity, addressing the SEC's key objection to pass spot Bitcoin ETFs. That's when the dominoes began to fall. After months of speculation, the SEC approved the iShares Bitcoin Trust in January 2024, alongside a few other spot ETFs. But BlackRock was more than just competing. Now it was dominating. Almost immediately, billions of dollars began flowing into the ETF. Within weeks, BlackRock's trust had outpaced its rivals, fueled by institutional capital, retirement funds, and hedge funds seeking safe Bitcoin exposure, all under the BlackRock banner. Behind the scenes, that meant BlackRock was directly buying Bitcoin, accumulating it in vast quantities. Not on an exchange or retail hype, but just quiet, structured, strategic accumulation. By mid-2025, BlackRock held over 275,000 Bitcoin, worth billions, a staggering slice of Bitcoin's fixed 21 million supply. They had entered the space and were now positioning to control it. But was this a change of heart or a calculated takeover in disguise? BlackRock's public messaging is crystal clear. We believe Bitcoin is an international asset, they've said. Larry Fink, once dismissive of crypto, now calls Bitcoin digital gold. He's appeared on media circuits praising its utility, resilience, and potential to transform global finance. To the casual observer, it might look like conviction, but look closer, and it feels more like a corporate land grab. BlackRock isn't interested in decentralization or peer-to-peer freedom. It's building products, ETFs, institutional pipelines, derivatives, all designed to capture fees, flows, and influence. They're not adopting the ideals of Bitcoin, they're wrapping Bitcoin around their own ideals. By mid-2025, BlackRock's ETF had already swallowed over 275,000 Bitcoin, roughly 1.3% of the total supply. And that number's growing. This isn't just participation, it's possession. And with possession comes power. It's exactly how BlackRock is now shaping the narrative, deciding how Bitcoin is presented to investors, regulators, and the public. They're influencing policy language, regulatory positioning, and the very infrastructure through which Bitcoin moves in and out of institutional portfolios. They're not mining blocks, they're owning the rails. To many in the crypto world, this feels like betrayal. The very asset built to resist centralized power is being co-opted by one of the most powerful centralized entities on Earth. This isn't the decentralization revolution people imagine. It's Wall Street's colonization of crypto, and BlackRock just planted its flag. If this changed how you see things, hit subscribe. We break down the strategies Wall Street won't explain before they impact your financial future. Now let's see why the deeper you look, the more Bitcoin starts to feel unfamiliar. BlackRock's entry didn't just move the market, it redefined the asset. Bitcoin, once dismissed by institutions as volatile and fringe, was suddenly legitimized. Headlines read, "Wall Street embraces crypto." Prices surged, confidence grew, but legitimacy came with a price. As BlackRock's ETF gained traction, Bitcoin's value began tethering itself to ETF flows rather than peer-to-peer demand. The ethos of the cypherpunks, privacy, autonomy, freedom from centralized control, was quietly replaced by regulatory filings, custody agreements, and quarterly reports. Today, Bitcoin isn't just traded on crypto exchanges. It's tucked inside 401ks, pension funds, and retirement portfolios, all routed through BlackRock-managed products. And it doesn't stop there. Coinbase now handles custody for BlackRock's ETF. The SEC's language around Bitcoin aligned closely with frameworks that benefit institutional giants. Everything from custody to pricing to access is increasingly defined by institutions for institutions. The irony couldn't be sharper. Bitcoin was created as a tool to escape centralized power, a rebellion against the very kind of financial oversight and manipulation that led to the 2008 crash. But now, one of the architects of that system, BlackRock, is fast becoming Bitcoin's gatekeeper. The asset may be decentralized, but its influence, its access, its future, that's being shaped in boardrooms, not blockchains. So the question isn't whether Bitcoin will survive or not. It's who gets to define what it becomes. In the end, it's not just about Bitcoin, it's about you. You see, Bitcoin was supposed to be liberation, almost like a way to opt out, a tool for sovereignty, not tied to banks, brokers, or billionaires. It was designed for people who wanted control over their money outside the system that failed them. But when you buy Bitcoin through BlackRock's ETF, you don't own Bitcoin. You own a regulated financial product that tracks its price. You can't move it. You can't spend it. You can't custody it yourself. What you own is exposure, not autonomy. And for many, that's more than enough. BlackRock's ETF makes Bitcoin safe for institutions, retirees, and traditional investors. It may drive the price higher, and it may bring more liquidity. But for long-term holders, it raises deeper questions. Do you want Bitcoin as an asset or as an idea? Because this shift isn't just about price. It's about philosophy, access, and risk. Bitcoin is becoming easier to buy, but way harder to control. And if a few institutions hold massive portions of the supply, they also influence its future, its narrative, and maybe even its code. This isn't a crypto revolution anymore. It's more like a corporate takeover wrapped in legitimacy, dressed in suits, and blessed by regulators. And unless you're paying attention, it's easy to miss the switch. From freedom to permission, from ownership to observation. Bitcoin promised freedom, but BlackRock brought control. The question now isn't if you'll profit, it's if you'll still own what you think you do. Let us know your thoughts in the comments.